What's up, YouTube? This is Martin Day Trades, and today on TradingView Tips and Tutorials, I have how to become rich day trading from your phone, patience and timing. How to become rich day trading from your phone, patience and timing. Now, when it comes to the 1% rule, if you've watched my other videos, I have this idea which most profitable traders have is, and that's risking 1% or having one good trade, 1%, and how patience and timing is important for that one trade to get to the optimal trade entry at a certain time for a move for a good quality trade. So, uh, my mentor Andre Diaz, he's just stacking up his wins and kicking rocks on 0% days. Some days he doesn't even trade, and then he trades on quality days and stacks his wins. So, with that being said, let's go ahead and come to the charts. So, guys, here we go. I know I'm not a Bulls fan. This is one of my shirts my good friend. Oh, sorry about that. I hit the wrong button, guys. Here we go. And actually, before I forget, please, if you can, like, comment, subscribe. Um, it's taken me a while to put this whole studio together. These videos, all the things in the background, and how it goes from scene to scene is called the transition stinger. If you think that's pretty cool, go ahead and just let me know. But as of right now, I have what's it called? This was today's trades, guys, and it's traded lower uh into the day, and this was the entry I was looking to go short, but I caught this trade from here to here. I was risking 1.5% for 50 pips. So once I got close to the take profit 2, I scaled out for about 2.5% gain in my account, so I can't really get upset at that. Um And actually, guys, let me kind of just come over here, and I want to show you guys. If you guys want, you guys can follow me on Instagram here, Instagram, guys. You guys can see that I have 290 posts. I keep adding. One day I'll go through it and really refine it. But I'm gonna go ahead and show you guys. If you guys want to follow me, you guys know the name. It's right there, Martin Day Trades. But here's the QR code, guys. If you got your phone out, you could go ahead and I'll leave this up. Um, Take a picture of that, and then go ahead and follow me on Instagram. You guys can see my content, and I post a lot of my stories in Instagram, so you can see me taking live trades. Probably the most important aspect to this. Now, with that being said, I'm just gonna scoot back and get comfortable. Fix myself right here, guys. Getting a little tight there. But yeah, let me go ahead and fix the camera actually. Get a little bit lower. Okay, there we go. There we go. I'm gonna get a little bit lower here. Yeah, that should be good. Okay, so yeah, guys, I'm already 4 minutes in, and I haven't really even talked about the how to become rich day trading from your phone. Patience and timing. So patience and timing is very important. You get one opportunity a day, guys. We're alive every day we are reborn, and it's only once a day we are reborn. So that means there's only one day that's able to play out. And there's always a move within that day or a couple of moves that can be profitable trades. And knowing when to get in, not just taking a trade because of emotions and feelings or it looks like a wishful thinking, right? It's best just to get in on a when you predict price to get to a certain area. So that's the timing part, and then the patience part is to actually wait until it gets to a 62% fib, a 70% fib, 79% fib. Because remember, that could be 20 pip spread from 60 to 79%, 25 pip spread. and that messes up your risk to reward ratio. Here, let me go and show you guys what I mean by that. So let's say this was a trade right here, okay? Like right here to right here. This expansion, bullish expansion, we're predicting a right here was the entry 300. Okay, I'm actually gonna fix my opacity there. 25%, and we'll go a little lower right there. Okay, so you can see that there's this 50 pip risk that I normally use. I could have used an easy 25 pips, would have been really good within the range, but I had a 50 pip risk, right? I normally use 50 pips, and we're looking for a 1 to 2. This wouldn't have hit it, but I just want to show you guys an example, okay? Now let's say that this was the trade plan, right? We can then, let's say we had, okay, well, we wanted a 25 pip stop loss, and let's say we got in on this right here as it was squeezing up. We got in, and then let's see, it would have stopped us out right there, 25 pips. So 50 pips, and we'll leave this right here at the top of the expansion, okay? Like we were getting out like right there. A 1 to 2 risk reward right here if this would have played out. But if we used a 50 pip stop loss from that entry, well within this range right here. But this turns into a 1-to-1 risk to reward trade right here, guys. So that's what I mean about, hey, you got in, this was the trade, it started to rocket off. You can see these bullish candles printing, right? You can see these bullish candles printing. And if you, these ones right here. So if you don't get in right at the 300 level as predicted, this could have been, you know, right at those lows. You could have got in right here at 300. That was the entry, 300. So this could have been, and let's say we are using a 25 pip stop loss still. This could have been an easy 1 to 3.5 risk to reward. So yeah, there is good trades in these if you're risking the right amount of risk, 25 pips for this move. Because if you're predicting this to come up from 300 to, let's just say, test this high order block right here, and I'll just draw out the order block real quick so you guys can see that. It's this last up candle before the down move. You can see it went right through it and tested it. Um, you can see that the expected move we're looking for if we just go to the order block is 90 pips. So even if you wanted to a risk of and reward of 1 to 2, you would need to risk 45 pips. But because we're risking 25 pips, this turns into a for a 90 pip gain, essentially a 1 to 3.5 risk to reward. So this is a really well set up trade. But as soon as it gets higher than 300, so in here in this range, you're trying to catch it in this consolidation range below anything below 300. Now, when you get anything past 300, let's say we would have gone like right here at 307. This is now a 1 to 2.39 risk to reward. That's the difference, guys. Look at this difference. That is the difference between a 3.5 risk to reward at right at the 300 entry level to, let's just say, a 310, 10 pips off, or let's say you got in at 213 or 313. That's 13 pips from the entry. This is now a 1 to 2 risk to reward if we scale everything out right here. So guys, there's this rule about timing and patience for a price to get into your OTE, your expected trade entry, big figure levels, you know, mid figure levels, 300. What is it right here? So this could have been a trade-off from this level to this order block. And then maybe taking out, if it's a 3.5, maybe it's carrying 3% and letting a little runner go just in case. But if it didn't, you know, we already moved our stop loss to break even. Once it got to TP1, it would have never hit our TP. If you guys look carefully, guys, this is what I do every trade. As soon as I get in, I then use this tool go on my phone, see what my entry was, use this tool, pull it down, and then I use a Fibonacci tool. Timing and so I'm just showing you guys what timing and price can do. If you get the right time and the right price, you do that. As soon as price got to -1 up here, I then would have went like this. So you can see now that price never tapped back into it. So this could have been a risk-free trade as soon as I tapped right here at TP1, and then it would have done its thing and then went up to the take profit, which we would have had probably right at the middle of the order block at 388, because then it went up to 394. So 388 was a pretty good area to target. Now, with that being said, guys, I just want to show you that was an example of patience, making sure, waiting for, if you missed all these trades and you're looking for a trade in the day, you could have gone right here and right there. It's only a 90 pip move, and that wasn't the meat of the move. This was the move right here, guys. This was the move. Right at the 498. Someone could have been risking 15 pips right here, which would have been a, or 20 pips, which would have been a 5 lot. I would have went in 5 lots right here, guys. Gee, so every 2 lots is 1,000. Um, no, I would have still been risking $1,000 on this trade right here for 20 pips. $1,000 is all I'm willing to risk. But every 20 pips it would have went into profit. That's 1,000. So at 100 pips, that's already uh 5%, right? 20, 40, 60, 80, 100, 5%. And this right here moved, if we got in right at the top, all the way to the same market session closed, that was 200 pips. This was a 10% day if anybody was risking 20 pips and then took the whole trade out as soon as it got down 200 pips in profit. Now, if you held it even lower, the Asian session is trading even lower than what the London, New York session closed at. Let's say you held this at, you know, 487, held it to buy right now and wanted to sell it. This is 343 pips. Let's just say it's 350. So for every 100 pips, you're gaining 5%. That's already 15%, 16, 17%, an extra 40. This is a 17% gain right here if one was risking 1% for a 20 pips. But let's say someone was risking 1.5% for 20 pips. Man, this could have been a really nice play. And I was looking to get in at the 500 level, but because of patience and timing, yes, I was ready during this time. But it never hit price. So I'm gonna have the patience to just not take that trade, you know. So it is what it is, guys. But if you gotta know that there's always a reaction at certain times in the day. Right here, what time is it? 9:30, guys. This is the market open. We had this run up, and this is where I got in for the buy. And then, 9:30, 9:55 to about 9:45 to 9:55, a 10-minute window frame right here. Price was in this range for 15, was it? How did I say 15? About 15 total minutes. Price was in this range. Someone could have entered right here. What did I say? Risk 20 pips. And been well within that range, right? Right? Okay. And then have taken this to, the market close, we'll say down here. That's a 1 to 10 risk to reward right there, guys. That's wild. So just know that there's these moves that happen, guys, and it's through back testing we get familiar with being confident with then taking these trades live as they're happening every day. And then that's where the learn from your mistakes idea comes in, because in the very beginning, guys, you're not going to know what you're doing. You're not going to know about timing, liquidity pools, fair value gaps, order blocks, buying below the 12 a.m. open, selling above the 12 a.m. open, um, knowing that one trade a day can change your life. Just you're not going to know, guys. And with patience and understanding that this is every day, you will get better. You have to have trust in that idea and just learn, because Once you do this and you start seeing results and creating your own trade plans in the morning when you wake up, just move the charts around, do what you do, get your analysis, and then trade with a good quality trade group. And then I trade with the funded traders, so I compare my analysis, which now almost every day mimics his, but I don't take all the trades he takes, and he doesn't take all the trades I take. At the end of the day, it's a me versus me. It's a day trader versus day trader. It's a you versus you game. Uh, there's people making money. There's people creating, entering, and exiting these trades at good points. Like, what are they doing? And that's a good question. So they're not over trading. They're not over leveraging. They're very patient. They know when to enter and exit. Timing is important. They've learned to one trade a day and kick rocks, or if they want to take a second trade, it's up to them, but that's just more risk, market exposure time in the overall market. So, um, I don't really have anything else to say, guys. So here's my QR code for Instagram. If you want to go ahead, pull your phones out and take a picture of that, and then hit the follow button. I'll follow you back. Just write me a quick DM, direct message, and just say, hey, I saw your YouTube video, and just giving you a follow, and I'll follow you right back. Uh, with that being said, like, comment, subscribe, guys. In the bottom corner of your guys' screen, you guys should see a watermark trademark logo here. With put your cursor right over it, and you should see the subscribe button. Just go ahead and click that. If you don't want to get notifications for my content, you can cancel that through the notification area. Or if you want to know whenever I post anything, you can put all notifications. With that being said, guys, I love you all. Go ahead and just have patience with yourself if this is what you truly want to do, and know that over time, I don't know how much time, guys, but over time, you will become a profitable day trader.